Assalamu alaikum, students. Before jumping on to today's lecture, that would be about various forms of ownership. We will have a quick reflash of what we discussed during our last lecture. Our last lecture comprised of two sections. In the first section, we tried to understand TOWS matrix. If you can recall, we tried to understand that TOWS is basically based upon SWOT analysis, and it is basically a tool that actually gives you the direction as of how can you utilize your strengths, weaknesses, opportunities, and threats. We came up with these 4 quadrants. In the first quadrant, we would try to intersect strengths with opportunities, whereby trying to utilize our internal strengths to exploit external opportunities. In the second quadrant, it was opportunity versus weakness, whereby we were using external opportunities to minimize our internal weaknesses. The third one was strength and threats, whereby we were trying to utilize our internal positive points to minimize the adverse effect of the threats. And last but not the least, and we were very clear in understanding कि इस वाले quadrant की treatment different थी, that was WT. Yes. So by analyzing our strengths and opportunities, we would try to come up with options that would kill at least a weakness and at least a threat at the same time. एक तीर से दो शिकार करने की बात कर रहे थे हम लोग. After understanding TOWS matrix, or I came up with this mock organization as well, and we tried to came up with various combinations. We moved ahead and then discussed the feasibility analysis of a business. And there were 3 main areas in which we saw that we need to check the feasibility. One was industry and market interaction. The second one was product and service feasibility, and third one was financial feasibility. And how do we check our industry feasibility? Which tool do we use? Porter's 5 forces model. And what are those forces? Strength of rivalry, good. Threat of new entrants, power of suppliers, power of buyers, and the substitution effect, how threatening the substitutes are. Then another tool that we, or option that is available with the entrepreneurs to check out the feasibility of their industry or market is what? Prototyping. Business prototyping. It's not product prototyping, it's business prototyping, whereby you go for small scale operation of the business, where you get a true feeler or real feeler of interacting with your suppliers, customers, and other market forces and stakeholders, and you get to have a better understanding of the dynamics related to that business, and you can sense out if that market and industry is really feasible or not. The next one was product feasibility or service feasibility. And what were the tools through which we take it? We go for primary research, in which we could conduct surveys, we could go for interviews, and focus groups. Remember that? What are focus groups? Group of people, it could be group of experts, it could be even group of potential customers whom you let use the product or service, and then you take your feedback upon the utility that they have driven out of it. So if whatever they point out, you tend to take those suggestions seriously and try to inculcate them in updating your business model and product. Any other tool, Ji? Delphi technique. All that was not written on the slide. I told you that we go for altogether new products that are not existing in the market. Then we tend to utilize the expertise of the expert of that industry. And we let them have discussion together and expect them to continue having that discussion until they come to a consensus. And using their expertise, we tend to make decisions whether yes, this product is feasible or not. Then home trials are there.
Prototype.
And you can go for product prototyping. Third element was financial feasibility. How much capital do you need? How much money do you need to start that business? what are the possible profit earning possibilities there, and based upon these two numbers you can go for analyzing the return on investment on that business. It may not necessarily be very accurate figure, but at least it needs to be concrete enough whereby you can differentiate between various options as of which is more feasible or which is more profitable, right? Now our today's topic is forms of ownership. An entrepreneur, although he may have a great idea, although he may have a great product to get into market, but there are a few legal aspects that need to be taken care of. He needs to get his business registered. But what are the options available for him? We are going to try to go through the pros and cons of each of the options, but please do not mix it with the intellectual property rights. Remember that?
Yes.
When we go for patents and other things, they are altogether different things, whereby you actually try to get your intellectual property registered with the government. Here, you are talking about getting your business registered. Usually, unless you are actually trying to get patent in your own name, if you have got a business registered in your name, you can even have patent registered in the business name as well. So, how do we choose that which form of business is suitable for us?
According to our interest.
According to our interest, there are few more considerations apart from interest. You may be interested in having a limited company, but just having an interest in having a limited firm may not necessarily be a concrete reason to go for limited. Market value, we'll go through the points. There is no best form of ownership, as of no one can tell as if the sole proprietorship is the best option, or going for partnership is the best option, or going for private limited or public limited company. No one can tell you exactly that yes, this is the ideal most form of ownership. It would depend upon various factors. The best of form of the ownership depends upon an entrepreneur's particular situation, the circumstances that he is in, the aspirations he has for the current status of his business and the future orientation of his business. Understanding the characteristic of each form of ownership and how well they match entrepreneur's business and personal circumstances is important. So, what are the factors that affect the choice of going for which form of business? First of all, and the foremost, tax consideration. Each of the form of the business may have got different tax implications. For instance, we'll discuss it thoroughly later. In few forms, the taxation documentation is extremely minimal. Whereas in other form, the documentation required by the government is so extensive that it is little hard to hide what you are actually earning or what the loss you are making. You cannot lie much about it. In that case, you have to declare your actual income, and in particular form of business, the government itself charges a much higher rate of taxation as compared to other forms of business. So how much tax you are willing to pay is going to be an important determinant. Secondly, and it's a very important one, liability exposure. Any idea about what liability exposure is? No? Let's say if I was running a business and it incurs losses to an extent that I wish to close the business, and the money I owe to the creditors and suppliers, let's say or rather my business owes, I'm talking about sole proprietorship. Let's say I owe 1 million rupees, 10 lakh rupees. And the current assets that I have, including the machinery and other supplies and inventory, they are of value of rupees 800,000. So even if I'm going to close my business today, my assets are 200,000 short of the liabilities that I have to clear. In certain form of business, if I'm declaring myself bankrupt, for instance, the creditors can go to the court and they can even ask for my personal assets, not the business assets, my personal assets to be sold in order to clear their receivables or my payables. But in other forms of business, the personal assets of the owner are protected. The only assets that can be sold in order to clear the creditor's receivables would be the business assets, not the personal assets. So different form of business have got different liability exposure. The maximum liability exposure would be in one form, that is sole proprietorship, whereby all of your personal assets are exposed to this treatment. On the other hand, when you go for public limited firms, if they go default, yes, the creditors can go to the court to get their accounts cleared, but the personal assets of the shareholders will not be sold in order to clear those accounts. Startup and future capital. As of how much money, how much capital you require now at the time of start of business, and if it is expected to expand a lot, maybe in 2 years, 4 years, 5 years, how much future capital would be required. So each form of the business carries different potential to raise capital. So if some particular forms would require you to go limited in order to raise more and more capital, whereby you can invite commoners to invest in your business. Now this is something that the sole proprietor, for instance, cannot do. He has to rely upon loans or some borrowings from his friends and family in order to raise, or his savings, for instance, in order to cater for the capital requirements. Control. As of how to what extent you have the control of the business. In few forms, you will be the whole soul godfather of your business, whereby everything is going to be the way you like. But in other forms, due to some technical issues as well, you may have to give up a certain extent of control. Managerial ability. Some of the businesses would require you to be extremely diversely skilled, but in few other forms, you will have the luxury of getting experts who can work for you. You may not have to necessarily to be jack of all in order to run the businesses in those particular forms. And cost of formation. Different forms of business cost differently, and we'll discuss this in detail now. So there are basically three major forms of ownership of business. One being the sole proprietorship, the second is partnership, and the third one is corporation or limited companies. So if we choose to register our business as sole proprietorship, what are the advantages that we can expect? First of all, it is very, very simple to create. All you need is decide name of your business, develop a letterhead, have your business cards ready, right? On basis of these documents, you can go to the bank and ask them to open a business account for you. And the bank will be more than happy to do that. Once you have got the business account with you, you need to go to FBR in order to get your NTN number, on basis of which you will get your journal sales tax documentation done, and you are up for business. Rather, it won't take more than a week. this whole process, maybe a couple of days. So it is very, very easy to form. Some of the business may require some extra documentation. For instance, in developed countries, if you were to start a restaurant, for instance, they might ask you for your certifications, as of if your staff has been certified in hygiene management of the facility, right? They might ask you for a report by some chartered accountant who certifies that basically on the basis of your previous records, accounting records, you are a good person to continue and to do this business. So depending upon these kind of documentation, the local council then decide whether to issue you license for doing that business or not. But in Pakistan, the steps are relatively simpler. It is least costly form to begin. Banks are more than happy to open an account for you. It won't cost you much. They might ask you for a minimum balance, 500,000 rupees. 500 or 1,000, not 500,000 rupees. Then registration with FBR might cost you a few 100 rupees, not much. Okay, that might have included the consultant fee as well. But anyways, I may be wrong. An updated schedule of the company registration fee could be more helpful. That can give you spot-on details. But usually what happens is instead of people going themselves to get the company registered, they tend to go to this lawyer who will take his big cut. So for that reason, we tend to relax, and we are more than happy to spend 25,000. Profit incentive, G. In sole proprietorship, whatever profit you make is yours. You are the one to enjoy it. If you wish to spend it, enjoy it, you can. If you wish to retain it, save it, and reinvest in the business, you are not answerable to anybody, right? Total decision-making authority. You are the one deciding what products to sell, whom you wish to sell. If you do not like the face of any customer, you can tell him that I do not want to sell you this product. You are the one who is deciding that which creditor is to be paid first, whose payment is to be delayed. All of the decision making, whom you wish to hire, whom you wish to fire, you are the man, right? Maximum authority, and there are no legal restrictions. As of in other forms of business, the government through Securities and Exchange Commission may ask for some regular reports as of how is your accounting update, how much profit you have made. So in case of sole proprietorship, government does not intervene much, asking you to go for these kind of documentation. And it is easy to discontinue. All you have to do is to let the authorities know that you are not interested in doing business anymore, and you are done. Let FBR know, let the GST guys know that you are discontinuing this business, and it's already clear. The story is not that rosy altogether. There are few disadvantages associated with sole proprietorship as well. First, for unlimited personal liability. It's good to enjoy authority, but equally, if the business fails, be known that your personal assets can be sold in order to clear creditors, receivables or their claims. Limited skills and capabilities. A business usually requires diverse set of skills to operate. You'll be needing to deal with the human resources, right? You'll be needing to take care of the marketing. You'll be needing to take care of the inventory management, supply chain management, ensuring the shipments are being made and your product is reaching your customer in a safe way. Managing all the finances, managing online marketing, managing one-on-one marketing. I mean, all of these things are to be done. And not everybody has got this aptitude to do all the things perfectly. So one of the major disadvantages with sole proprietorship is that the limited skills or capabilities may hinder the business operation. You can, but usually the sole proprietorship, not every sole proprietorship is of that scale where they start hiring others to do these chores. For instance, usually you'll find sole proprietors, let's say, running shops. Now, if they hire somebody whom they have to pay 15,000-20,000 rupees, I mean, that would be half of the savings that they're expected to take home. Yes, there are businesses where they tend to hire managers, but not every business. Usually, sole proprietorship is done in the small segment of SMEs and corporates. So usually small businesses fall in this one. And here, the major saving, one of the major saving is being self-employed, whereby you are at least saving the wage that you have to otherwise pay to other to do your job. Feeling of isolation.
So why isolation? So some people like isolation. It's best business for them.
They can go up and go for this tracking if they like isolation that much. Feeling of isolation because at times your decision may not yield the right results as you had expected. So you'll have no one to turn to. And it would be that moment when you'll realize, yes, the authority is good, but at times it carries some repercussions as well. And these would be the moments that you will be the one taking care of all the stress. And no one else would be bothered because it was your take, your shots, and you are the one who is going to face the music. So yes, the feeling of isolation could be there. I hope the point is clear. Is it? Limited access to capital. Sole proprietors would usually bank upon their savings or lendings from their family members, gift from their family members, or if there is businesses credible enough, or if they possess enough assets against which they can borrow some money from the bank as well. So not everyone is resourceful enough. So even if there is an opportunity for them to expand business, it may not be very easy for them. Lack of continuity. If the sole proprietor dies, they do. It's not a surprise that they do. In legal terms, the sole proprietorship is over. Unless it is transferred to his kids or if the business is sold to someone else. So that is again a major disadvantage of sole proprietorship. Although the shop will be there, the assets will be there, but in legal terms, the business will be over. Liability exposure, G, claims of sole proprietors creditors would be adjusted against the sole proprietor's personal assets. And it's a very scary scenario.
Yes, sir.
Right, the next option is going for partnership. It's an association of two or more people who co-own a business for purpose of making a profit. Please lend me your ears. Even if you are planning to do business with your siblings, do not ever do it without drafting a partnership agreement.
Yes, sir. We have experienced already.
You have already experienced?
Yes.
Please enlighten us a bit.
Sir, it's like my chachu made the investment in his cousin's business and he ran away with all the money.
Okay. In that case, even partnership deed cannot do much if your partner is that unreliable. But usually what happens is that at times of inception of business, everybody is positive. everybody is optimistic that yes, we can do it, we'll do it, and we are going to have that much of sale, and we'll have that much of money, and we'll go to KFC and McDonald's and whatever. But then reality checks seeps in. And then you realize, oh, I didn't cater for this expense. This was the customer I was expecting would take 100,000 of the units, but he's only taking 1,000. And all of your projections may go down. And that would be the moment that rather than focusing on the profitability, you'll be focusing upon that how much loss we have incurred. So these are the kind of things that should be catered upfront. When everybody is optimistic, and that is the point where you need to discuss as much as possible and fix the shares, fix the liabilities, fix the benefits. And this is a document that would be the lifeline of your business. Now let's have a quick look as of what components it must have. First of all, it would identify various partners with their national ID card number and addresses. The agreement, the partnership agreement, must tell the financial contribution of each partner. Right जी, इस बंदे ने 100,000 contribute किए, he has contributed 300,000, this chap is contributing 1 million. So it should be very clearly written. What would be the division of work between partners? Pulling money out of your pocket is the easiest part. Running that business is not that easy. So the responsibilities need to be very clearly jotted down, that who is going to do what. Who would be responsible for doing what? What property is included in partnership and how it is defined. It's not necessary that all of the partners would come with cash. At times, it is one chap with the cash and the other man merely has the idea. And he's the one responsible for operating the business, because the other man, he's cash abundant and does not have necessarily that much of time to look for the day-to-day activities of this particular business. I can recall one example. I know 3 chaps who went for getting this franchise of Elite School. So one of them had a building, and 2 of them then pooled up together in order to pay for the franchise fee. Now because one contributed his building doesn't mean that since he has not contributed any cash, so he should be getting less of profit. In fact, most of the major chunk of investment was coming from his.
Sir, if one is actually contributing the money and another is contributing idea, to money should contribute to ज़्यादा profit?
Sorry?
बहुत ज़्यादा financially contribute किया. अगर ये contribute करने सिर्फ idea दे रहा है, तो जिसने contribute किया financially उससे ज़्यादा profit नहीं मिलना चाहिए. No.
It is subjective. Your argument is subjective. Let me explain. Let's say, what is your favorite bit in biosciences? Which field do you like to do research in? Biochemistry. Let's say I'm a financer, and you come up with this wow quality idea that you think is patentable, and you are looking for some investment whereby you can do it on a commercial basis. Yes, I've got money, but there are hundreds of thousands of people who have got money. But there are not hundreds and thousands of people who have got the expertise that you have. You are the one who understands the science. You are the one who understands that how to upscale the production of that thing, right? So you may have necessarily those expertise which are lacking in the market. So that would actually give you more leverage in this debate. So it is always going to be a negotiation as of what percentage would I get and what percentage would you get.
Sir, there is another question. Let's suppose 2 बंदे financially contribute कर रहे हैं, एक बहुत ज़्यादा कर रहा है, एक कम कर रहा है financially contribute. तो उस केस में profit होगा पहला.
Exactly, मिलना चाहिए. Proportion, usually the profits are proportionate to the contribution. Let's say if I'm contributing 100,000, she is contributing 200,000, he's contributing 300,000. So if we were all working in the business, if none of us is a sleeping partner, he should be getting the 300,000 bit of the profit. She would be getting 200 bit, and I would be getting the proportion that I should be getting on for contributing 100,000. So yes, these proportions are based upon the contributions that are done. Let's go a little further, और ये आपको point और भी clarify होगा. How well or can partnership property be used by individual partners? Yes, someone has contributed his property or an asset. Let's talk about that allied school. So the allied school operates from 8 to 2 maybe, let's say 8 to 3. After that, if one of the partners wants to do this tuition center there, तो उसकी liabilities क्या होंगी? How can he utilize that asset in his personal capacity? उसकी give and take क्या होगी? That needs to be clarified. जी.
So let's suppose the capital is like Taimur and Hadi invested equal amount.
Taimur is happy? जी.
For instance, Taimur invested 100k or Hadi invested 200k.
Okay.
I invested 10k.
Okay.
What will be the-
10K only?
Let's-
Okay.
For instance, तो ये कहते हैं इनकी प्रॉफिट डिस्ट्रीब्यूशन कैसी होगी? कितना से प्रॉफिट अगर आएगा तो कैसे आएगा?
Yeah. One chap is contributing 100,000. The other one is contributing 200,000. The third one is contributing 300,000. Total कितना है? 600,000. Gives you the percentage. ये formula लगाएंगे. Each one of them will be knowing that how much percentage they are going to get. It's as simple as that. ठीक है? लेकिन there are few other factors that need to be taken into consideration. Let me go through these slides. I think ये चीजें और ज़्यादा clarifying. It's not that simple. How will the bank accounts be set up? And who will be the signatory on the checks? It's important. I mean, you may have 15 partners, but you cannot allow everybody to have this authority whereby he can single-handedly sign the checks and withdraw cash. Then you can have another uncle like that, as she had. So, partners need to sit together and they need to identify the person or persons who would be responsible for taking care of financial transactions, particularly the bank ones. जी बेटा? ज़रूरी नहीं है. The law does not ask you, it's your call. हो सकता है कि most minority share वाला बंदा, the one who is contributing the idea, since he or she is going to be there all the time, and the investor is a sleeping partner whereby he only comes to check out how much profit you have made annually and take his chunk. So in that case, you will rely upon the person who is already available all the time. How will be the disputes related to partnership be resolved? When people work together, conflicts do arise. Right? How will we sort that out? Now there are a few ways. One is an open dialogue. Then what do? Invite a third party or go for arbitration. And it's a very common market mechanism whereby, let's say we are operating in a market, I8, and let's say me and Taimur are in partnership and we are in conflict now and we do not want to see each other face. One-on-one dialogue option is over. So what can happen is we can involve the local market committee there, whereby Taimur can nominate 1 or 2 individuals who will be taking his side. I could nominate 2 individuals, equal in number, jitne wo nominate kar rahe, who would be taking my side. And then we can have a 3-man jury who would decide the matter.
We should have like a mock fight.
Whereby you have people who are expert in the business and they understand the dynamics and they also understand the nature of conflicts, since they have already spent their lifetime sorting these kind of issues. So there are my people, there are Taimur people, and then you have got 2 or 3 chaps who are going to act like a jury. And that jury is not going to start work unless me and him first declare, and once that jury gives a verdict, we have to abide by it. And you cannot imagine a business running in full throttle when two of its partners are battling against each other in court. So, how the disputes would be handled is an important element. And the more you delineate the procedures that are to be adopted, the more easier it would be for you later on. If you stay quiet on it at the time of draft, trust me, लड़ाइयाँ ठीक ठाक हो जाती. What happens if one partner dies or becomes incapacitated? That also needs to be defined. Would he be replaced by someone else, or would his next of kin become the partner? और ये तमाम की तमाम चीजें आप mention करते हैं. Now this is a good one. What if one partner wishes to leave the partnership? He got his immigration.
Sir, he should pay jitna.
He will. But how are we going to decide the value of business?
So how much he contributed?
No. You contributed, let's say, in year 2000, me and you contributed 100,000 each. Now the business is valued at, let's say, 20 million. 2 crore rupiya value है उसकी. Now, because you are leaving, so my interest would be to keep the valuation to the down possible figure. So the conflicting situation can again arise there. That's the common practice. That's how market operates. How will the sale of business be handled? By the way, I was being sarcastic. To be on the record, okay, recording is being done. How will the sale of business be handled? Who will be the person authorized to conduct that sale? या अगर आप authorize नहीं भी कर रहे, तो what would be the mechanism through which you decide who is going to handle the sale?
So, but what if you authorize a person and he just sells the business without you knowing?
It's quite possible. It's quite possible, but it's for that reason you would add a clause that unlike writing checks, unless all the partners do the signature, the business won't be sold. समझ आई जी? Advantages of partnership. Now, where we were saying that there could be a feeling of isolation or limited managerial skills. Partnership के case में usually those people tend to become partners who have got complementary skills. Let's say if I'm good at marketing, I may look for some partner who is good in finance. If I'm good at selling products, I'll be looking for someone who is good at producing them. So usually the complementary skills of partners can be very helpful in operating the business. The division of profits. There is no rule as per law as of कि जी कम से कम 50-50 की partnership होनी चाहिए. It could be 99.99 versus 0.01%. Government को कोई एतराज नहीं है इसके ऊपर. Right? So you can divide the profits as per the circumstances you are dealing with, as per the contributions that the partners are coming up with. Depending upon what partners you have, you may have larger pool of capital. जहाँ पे हम लोग बात करें कि जी sole proprietor will have his family and friends and savings and loans. Now you have got more than one people relying upon their family, friends and banks. Ability to attract limited partners. So if you wish to expand your business and you are, let's say, short of cash, you can add another partner. There is no restriction on that. But for that, a new partnership deed would be drafted, whereby the rights and the contribution of the new partner would be clearly defined. As in the case of sole proprietorship, The government regulations are very limited in case of partnership as well, and the taxation rate is also low.
So what about the liabilities if the business is failing
Sir,
and we have
ये
to
जो government regulation है क्या मतलब है?
In case of corporates, this was the point I would have discussed later on, the Securities and Exchange Commission asks every public limited and private limited firm to share their profit and loss statement every year. In case of limited firms, this is the document that has to be made public. So it's available from Securities Stock Exchange. You can go to online websites of the businesses, and there you can download these set of informations. But in case of sole proprietorship and partnership, these kind of disclosures are not stipulated or required.
So what about the liabilities if the business is failing and we have to give back credit to the people?
Getting there. In case of partnership, this should clarify. There are two kinds of partners. One would be the general partner, and the other one would be declared as or considered as limited partner. The general partner would be the one taking active role in business management, and just like sole proprietorship, he would have unlimited personal liability. So the partners which are declared as general partners in the partnership agreement, they will be acting just like sole proprietors. So in case of failure of the business, if the business goes bankrupt, their personal assets will be exposed to the creditor demands. And each partnership agreement, each partnership must have at least one general partner. Now there's a point that needs to be understood. If there is one general partner who is taking extra risk in that partnership, he must be asking for extra bit of profit as well, because he is more exposed to the risk. Then you have got limited partners, and they're the ones who cannot participate day-to-day management of the company. It's not that they do not have capacity. They could have other engagements. I mean, usually people are doing jobs and they would be sleeping partners in other businesses, and they just contribute their capital or maybe buildings or whatever. And they would have limited liability for partnerships debts. So जनरल पार्टनर्स का जो क्लेम है क्रेडिटर्स का, वो मैक्सिमम जनरल पार्टनर पे होगा, और he will be the one on the chopping board. Disadvantages जी, at least unlimited liability of one partner, that would be the general partner. Capital accumulation, that is the ability to raise more capital. Yes, it may have a better capacity to raise capital as compared to sole proprietor, but as compared to the limited firms, the capacity is still too little. Difficulty in disposing of partnership interests. If one partner wishes to leave the partnership, usually they do not leave on a good note. खुशी से कोई भी नहीं जा रहा होता, unless there are some real unusual circumstances. तो ये dispose of करना उस partnership share को, partner को, it becomes hell of a task. Lack of continuity जी, again just like sole proprietorship, if any partner dies, a new partnership agreement has to be drafted. And there is a potential for personality and authority conflicts. Right? मैंने उसको कहा था कि पैसे दे दो, लेकिन उसने कहा कि जी नहीं, मैंने पैसे नहीं देने. तो partners में it's a very common issue that is usually dealt with. The third option available is of getting the company registered as corporation or a limited firm. So basically, this is a separate legal entity from its owners, and there are two kinds of limited firms or corporations. One is publicly held and the other one is privately held. Usually you may have come across names of various firms saying, let's say, ABC Private Limited or XYZ Limited. The one that says PVT Limited, Private Limited, would be the closely held, and the one that says Limited only would be the one that is publicly held. अब इसको समझ लेंगे फर्क क्या. The shares of the publicly held firms or the corporations are traded in stock exchange. The shares of public limited companies, that are the publicly held firms, are traded in the stock exchange. And even you can buy them.
Yes.
Since we are saying that they are held by public, so anyone can buy those shares at the price at which they are trading on a particular day when you wish to buy them. ठीक है जी. Closely held firms will have shares, but they are not traded in public. They are held by a small group of owners who tend to manage that firm. The advantages of corporation: limited liability of stockholders. Now that is a great advantage. In case of default, the personal assets of the shareholders are not exposed to creditor liabilities. So even if you are shareholder of XYZ Limited and it goes default, no one is going to come to you asking for कि आपने घर के कागज दे दें जरा वो बेचने हम वो. Ability to attract capital. The limited firms, by marketing their future potential and engaging investment banks and accountants and other law firms, they can raise huge amount of money through stock exchange. All they have to do is issue new shares, and people who believe in them would be more than ready to buy those. Right? Now this is a capacity that is not available either with sole proprietor or partnership. And transferable ownership. If you and I can buy it, it's as easy as that. I mean, ये मसला नहीं है कि जी बाकी partners, बाकी shareholders नाराज हो गए जी. नाराज हो गए, so what? So you can easily trade the shares. Public limited firms. In case of private limited firms, the share price that is held by, the number of shares are held by a small group of people, that is decided by the board of directors, and they can easily be sold to someone who is coming new to the firm, or can be bought from someone who is leaving the firm. Disadvantages. Getting a limited firm is not easy as sole proprietorship and getting registered the partnership. It requires involvement of lots of players. I've already mentioned investment bank aapko chahiye hota hai. You'll be needing services of chartered accountant firms. You'll be needing media managers who are going to create hype as of what are your potentials. So you'll be working upon the getting this incorporation for quite a long period of time as compared to sole proprietorship and partnership. Double taxation. Now this is an interesting concept. ये समझ लें जी, double taxation. Let's say Hadi, when he wakes up, buys shares in a particular firm, right? Hadi Limited. He's not waking up? Okay. अब कंपनी ने कुछ सेल्स की, उनकी कुछ कॉस्ट आई और उसने कुछ प्रॉफिट अर्न किया, राइट? सो सेल्स, कॉस्ट ऑफ गुड्स सोल्ड, इसमें से आपने यूटिलिटी एक्सपेंस निकाला, रेंट निकाला और सैलरीज निकाली और इस तरह के सारे खर्चे निकाल के यू केम अप विद अर्निंग बिफोर इंटरेस्ट एंड टैक्सेशन, EBIT, अर्निंग बिफोर पेइंग इंटरेस्ट एंड टैक्सेशन. इसमें से इंटरेस्ट पेमेंट निकाली, यू केम अप विद अर्निंग बिफोर टैक्सेशन. इसमें से गवर्नमेंट ने जितने पैसे लेने हैं वो आप जब डिडक्ट करोगे तो आपका नेट प्रॉफिट आएगा. सो पहली बेट ऑफ टैक्सेशन कहां पे हुई? जब कंपनी ने अपनी प्रॉफिट एंड लॉस स्टेटमेंट बनाई तो उसमें उसने टैक्स पे कर दिया. अब जो प्रॉफिट आया उसमें से हादी को डिविडेंड मिलेगा, ठीक है? शेयर होल्डर्स के दरमियान वो प्रॉफिट तकसीम होता है. और अब जो इसके पास पैसे आए और इसकी जो दूसरी इनकम मिला के अगर ये इसकी पर्सनल इनकम का पार्ट बन गया ना, वो ये तो कंपनी की इनकम है. नाउ वंस दोज डिविडेंड्स आर गेट ट्रांसफर्ड टू हिज अकाउंट and along with all his other income, if he falls into taxable slab, इसको personal tax दोबारा देना पड़ेगा. So that means double taxation. Now that's an issue with corporations.
Sir, tax means essentially profit of half. Sir, are there dividend possible that half?
Now this would depend upon the management. Usually there are companies, अगर उनको नजर आ रहा है कि उनको आगे कैश की जरूरत है, so they can reinvest the profit in the business. So it is again decided by the board of directors. It's not mandatory that they keep giving dividend every year.
Double taxation technically I didn't get that point.
I'm running a company and you buy shares in my firm. So I operated my firm and I declared sales and I paid some tax on my business activity, right? Out of which, let's say, I give you some dividend. Since you are the owner of the shares, now you're also working in some other businesses as well, or you are doing your job. So when you declare your income and your total income, including the ones from this one, fall into taxable slab, you are going to pay tax on your income again. Personal. कॉर्पोरेट प्लस पर्सनल. ये वो इशू है जो कि आपको सोल प्रोप्राइटरशिप और पार्टनरशिप के केस में फेस नहीं करना पड़ता. Potential for diminished managerial incentives. Corporations are bigger structures, unlike sole proprietorship, and you cannot micromanage everything. So you have to rely upon managers, and you have to give up a certain extent of control over operations. Although you are there to look after it, but you cannot micromanage everything. Legal requirements and the regulatory red tape. Securities and Exchange Commission can ask you for all the information that they require, and you cannot say no to them because they are the regulatory body, right? And this is again something that in case of partnership and sole proprietorship, SECP would usually not bother you. Potential loss of control by founders, right? Let's say at the outset there was a firm that was created as a partnership. उसमें दो बंदे थे 50-50 के partners. लेकिन once they change the form of ownership from partnership to public limited company, now they would not remain the 50-50 partners. They might become instead of having 50-50, now how much they have altogether? These two ones. 51%. And 49% is sold to public, whereby me and you can buy those shares out of those 49%. Why are they keeping 51%? Majority share, to keep the control of the firm in their hands. The moment they miss that topping 1%, anyone else who has got more than 50% can take over the company. And particularly in Pakistan, our business owners are very keen to keep 51% among their families and friends. Why is that?
So that they don't lose their business to anyone else.
This is a trend you may not necessarily find happening in developed countries. ऐसा क्यों है?
Because they're saving for their kids and family, that's why.
No. लेकिन मैं आपको बता रहा हूँ कि डेवलप कंट्रीज के अंदर मार्क जकरबर्ग की शायद 26% शेयर है फेसबुक में. Yet the volume of business in Pakistan is small. So if foreign investors come, they can, if they do not keep the 51%, they can sweep all the shares into their bags and take over the businesses. बात समझ आ रही है?
Yes, sir.
Due to smaller volumes of business, international investors के पास तो पैसा है, and they are going to switch between various markets. The moment they get this opportunity, they will take over 51%. उसके बाद फिर वो चाहे कंपनी liquidate करके पैसे निकाल लें या जो मर्जी करें. You won't be able to do much about it. ठीक है जी, बात समझ आ गई है?
Yes, sir. Case study.
Thank you very much.
Thank you.
We are done.